Today we're covering cancellation, non-renewal, and policy changes for your property and casualty exam. These topics are guaranteed to appear on your test, and the exam loves to use tricky wording to see if you truly understand the differences. Let's start with cancellation, which is the termination of a policy by either the insurer or the insured during the policy period. The insured can cancel at any time for any reason. If the insured cancels, the insurance company will issue a refund, but it will likely be a short-rate refund. This means the insurer keeps a little extra to cover their administrative costs, essentially a small penalty for ending the contract early. Now, if the insurer cancels, the rules are much stricter, and this is a major exam focus. During the first 60 days of a new policy, the insurer is in an underwriting or discovery period and can typically cancel for any reason, as long as it's not discriminatory. Test questions often create scenarios within this window. After this initial period, the insurer can only cancel for a few specific reasons, such as non-payment of premium, material misrepresentation by the insured, or a substantial change in the risk. When the insurer cancels, they must provide advance written notice, and the refund must be pro-rata, meaning the insured gets back the full amount of the unearned premium without any penalty. Next is non-renewal, which is when the insurer decides not to continue coverage at the end of the policy period. This is different from cancellation, which happens mid-term. For non-renewal, the insurer has more flexibility with their reasons, often related to underwriting decisions like a poor claims history or increased hazards on the property. However, they still must provide the insured with advance written notice, typically 30 to 60 days. So the insured has time to secure new coverage. Sometimes, instead of non-renewing, an insurer will offer a conditional renewal. This means they are willing to renew, but only with changes, like a higher premium or a new exclusion. Finally, let's discuss policy changes. The only way to make a change to an insurance policy is through a written document called an endorsement. An exam trap is to suggest that an insured or an agent can verbally change the policy. They cannot. An insured can request a change, but only the insurer can formally alter the contract by issuing an endorsement, which then becomes a legal part of the policy. To keep these straight, remember this phrase: cancellation cuts the policy short. Non-renewal lets it die at the door. Cancellation is a midterm termination, while non-renewal happens at the policy's natural expiration. For free practice questions, AI-powered explanations, and more exam prep tools, visit openexamprep.com. That's openexamprep, all one word, .com.